Well, good afternoon. Yesterday was Fed Day, so we've got some interest rate news to discuss today. It is Thursday, the 8th of May. I hope everyone is doing well. Let's dive right into the numbers. Everyone's probably aware from the headline that the Fed did not move yesterday. They were not expected to. But there are some storm clouds on the horizon as far as when the next cut might happen. Remember, y'all, we moved 100 basis points last year. We're going to talk a little bit more about that as we try and get inside the brain of Jerome Powell to the extent that that's even possible, to find out why we are not seeing a more accommodative position from the Fed and whether we should be or not. So, obviously, I'm going to be strongly biased on the fact that we need to see some lower rates from the Fed. And I believe we have the justification to do so. And there may be some other reasons that the Fed isn't giving us that. So, we're going to discuss some of that. There's going to involve some speculation and opinion, y'all. I don't shy away from offering opinion. Might even get a little bit political at the end of the day. So let's dive right in and see what the numbers are doing. Interest rates for the last 30 days have been pretty flat, y'all. They've been trading in a fairly narrow range. We had a lot of hope and promise after the decline in first quarter GDP and after a better than expected PCE report, and even some of the internals of the unemployment report, or the employment report last Friday, y'all, that had such large downward revisions to the prior 2 months. You could make a case for us being where the Fed needs to be in order to move to a more accommodative stance. Reminder that when we moved 100 basis points last year by the Fed, those cuts were made when inflation was 0.6% higher than it is right now. So for the Fed to say they're going to wait and see on inflation, well, they moved 100 basis points when it was higher. So there may be other motivations, y'all. And I'm just, spoiler alert, my suspicions are that the Fed is trying to preserve some independence here and some autonomy from the administration that's pressuring them heavily for lower rates. They don't want to be appearing to kowtow to the administration. I think they're trying to preserve the perception of their autonomy and that they're not swayed by political pressure to the detriment of their job. Because frankly, we should be seeing better pricing with inflation largely at goal and with there being long term signs that employment is softening. Remember, it takes quite a while for Fed cuts to catch up and to have an influence on the marketplace. So they should be moving, and they're stubbornly not. What does that mean for us? Today, interest rates for Mortgage News Daily has a 30-year fixed rate loan at 6.88%. A week ago today, we were at 6.83, so we're up a bit. We were at 6.85 a month ago. I will tell you, y'all, interest rates are heading significantly higher today. I wouldn't be surprised to see us an eighth or so higher, knocking on the door of 7%, either later today or tomorrow, because we had a very weak 30-year bond auction today. Reminder that when demand is waning, the only way that you can increase it is to lower the price on those securities that are being sold. And that in turn raises the yield on those securities. Those yields are our rates, y'all. So that's the reason that we are seeing very likely higher rates in the very, very near future for today and tomorrow. Fed cuts, as measured by the Fed futures trading. The CME FedWatch tool yesterday had a 36% likelihood of a quarter or more cut at the June 18th meeting. That is now a 17% chance, y'all. So we've basically cut in half the likelihood of a cut at the next Fed meeting in June, based on Chairman Powell's comments, where 23 times he mentioned the word waiting in his statement. I found that online this morning from some folks that I trust over at MBS Highway. They had pointed that out. The markets are interpreting that. I think that's one of the reasons we saw such a weak 30-year auction, y'all. Folks are waiting for better pricing on those securities, and they think they're going to get it, and they're likely right, based on those comments from the Fed. In any event, what does this mean for us? I still think we're going to see lower rates in the months ahead, y'all. But for this week, it's not the case. I'm going to continue to watch it. Always blessed to have your referrals. Stay blessed, stay safe. We will talk to you next week.